Okay. Let's take a look at today. I was gonna try to get into the market, but I knew this was going to be a problem right now. And our problem is this. The market's problem, I should say, is Mr. Draghi. Yeah, not too much we can do with this. The issue is that um, my experience with Mr. Draghi is especially right now the question and answer session, and he can go in a lot of different places with his comments. And given the auction yesterday, actually given the auction over the last 2 days, my my expectation is that this market has been kind of waiting to see what he specifically is going to do. And as long as he is speaking, it's kind of like yelling. As long as he is speaking, there is potential for um, volatility in the market. And that starts to get to some things that we're going to talk about today, like news, etc. So with that, um, I'm going to go through the market profile analysis. Should I look at the market every morning? Yep, exactly. I'm going to go through that today. So let's get started and get into the day. Our agenda for today is we're not going to spend a whole lot of time, but we're going to spend a little bit of time reviewing the homework from last night, how to complete the daily homework spreadsheet, how to look at building a trade plan, how do we incorporate news, and then trade execution and management. We're going to talk a little bit about trade psychology, just what I believe to be relevant, and then we're going to talk briefly about day 4 homework. So when we think about just a few questions from the homework, days 1 and 2 were certainly a significant amount of information. And I know it came fast, and I know that there was a lot, and there's probably still some concepts that people are trying to apply. Um, the important thing for me, and I'm going to sum up last 3 days in this, is as we go through the market examples, and I'm looking for trade opportunities, and I'm talking to you about trade opportunities. Uh, what's important right now is that maybe you don't immediately get, and probably not to the same conclusions I do, but as I explain them, and over the next 2 days, as I explain, this is what I'm looking for, this is what I'm doing, here are my current if-then scenarios. We're going to talk through why those are important today. Here are my current if-then scenarios, and as I get into a trade, why I'm managing that trade, what I see in the print, as I'm talking through the scenarios and um, my read of the context of the market and what I'm looking to trade, what's important uh, is that you kind of get it. You go, oh yeah, okay, oh that's right. So things are brought back from the last 2-3 days that are in there because we've gone through them. But the kind of indication over the next 2 days here that you've got it, you're getting it, it's there in your mind. The next step is to do the repetition, to go through it and go through it. Um, and I think what I will do next week is, and I haven't talked to DB about this yet, so hopefully he's okay with this. You can chime in, DB, is to try to get some pre and post market editorial videos out there relative to what I'm looking at in the morning for the day, and in the evening after the day has passed, what were the opportunities? How did the absolutely not. How did the day set up? How does it play into the next day? What are some of the key elements of the day? I kind of give you my narrative, of the day and what I'm looking at for the next day's trading. What I want to do is kind of give you some input and keep getting to those areas in your brain that recalls the concepts, the elements and the attributes of the volume profile to say, okay, yeah, if we're getting acceptance here and the market tried to test here, we got this kind of reaction, then this really means this based on the overall rotations. This is where we are. So if the market's going to auction normally, then we should start to say either this or that. So that's the kind of video I want to provide next week so that it'll help trigger some of those things that uh, you're learning and have learned this week. That's kind of the gist. The homework is really there to get you to start thinking about days 1 and 2 and how you trade. There were a few things in there relative to how you trade. What can you see in the order flow in the print? And then the day 3 homework really is to take that a little bit further, lean on the auction fundamentals, the fundamentals and elements and attributes of the volume profile, because what you want to try to get to, and this just comes with practice, is when you start to see a new distribution of price being created in the profile, and you start to see volume in the profile, the profile is starting to grow. Depending upon where VPOC is, I want you to get to the point of automatically saying, okay, well, we've got a small distribution. VPOC is near the top. We got to finish near the top. Automatically, that should trigger in your mind, this auction could be over in this direction. I want to start watching the print to confirm that, and my next trade is here. And that's really what the homework from last night is for, to help you have a framework to start writing some of this down. And my experience is as people write things down, it becomes more their own, and meaning that they take ownership of it. And it's something that is more cemented, and they're in their mental reference and easier to recall and actually use. So that's really what the homework is for. And I guess I don't expect that everybody here had gone through it. I would tell you that the homework that was for last night is something you can take next week and do several times next week. It wasn't just good for day 3 of the course. So last thing I'll say about it is keep that document handy. Reference it over the weekend because it's going to help jog your memory, get you looking at a few things. Keep it handy, reference it several times. I would not recommend that you just keep pouring through it day in, day out. Give yourself some time to write down some notes, step away from it, look at the market, come back, look at what you wrote, see if what you wrote before is true, still remains true, or if there's anything you can add to it or change to it. That's one of the ways that you will continue to learn. So I don't want to spend a whole lot of time on homework because I want to get through the planning and homework sessions. Question. Any thoughts about the VPOC for Tuesday and Wednesday the same? Yes, and we're going to get into that today. Very good question. I can tell you that it's already in the it's already baked into what we're doing this morning. So let's talk about doing homework. And I've said this twice already. Not that I've got a chart here that I'm counting how many times I've said it, but I've said it twice. I'm going to say it again. And this is really important. The only difference between those who are successful in trading and those who are not successful is that those who are successful in trading are willing to do the things that those who are not successful are not willing to do. So I know from my own experience, I know from my experience as a trainer and talking to a lot of different traders that there's this expectation that, and I believe it's justified based on a lot of the marketing that's out there. I mean, I bit on a lot of marketing that's out there. Um, I think there's this expectation that there is a system, a method, an indicator, maybe even a black box out there that is the answer in trading, and that all it takes is finding the right one and the right indicator, and you can make a lot of money in trading. I understand it. Again, I get it. However, my experience over the years, and after blowing up accounts, I blew up 4 or 5 accounts. I spent probably close to 40 grand on training when I first started in the business. My experience is that uh, the only way of becoming successful is taking the tools like we have here with OFA and doing the work. And uh, it may mean that it takes you 2 weeks, 3 weeks, 2 months, 3 months, depending upon your schedule and your time. But the only way of making this a long-term successful proposition is by doing the work. And a big piece of it every night is homework. And the objective of homework is to identify context of the current trading environment and whatever instrument you're trading, and the positions and convictions of the buyers and sellers. Because again, it's buyers and sellers that move price, active buyers and sellers. So you want to understand the current context of the context of the current trading environment and what their positions and convictions are. That's the objective of the homework, to gain context. You've heard in real estate, somebody know what the 3 most important things in real estate are? Location, location, location. Exactly. Well, I will tell you that in the same vein, the most important thing in trading is context. I would say context, context, context. There is nothing that will help you drive your trading decisions more than doing the work to understand the current context of the market. And that's what we're going to go through today. How to gain that context, how to look at the market, do the right research to say, here's the current context of the market. So as I approach the market and I'm looking for trade opportunities, because honestly, I don't know today if the market's going to stretch higher. I don't know if it's going to stretch lower. I could go out on CNBC and other sites, and I can read all kinds of articles where people are saying it's going higher, it's going lower, all kinds of articles, and they might make some good cases based on some technical indicators and what have you, but I know that none of it matters. And I know that none of them know what is going to happen today. So relative to the context, as I look at the market and I do my work, I can say, all right, this would make sense as the market is auctioning. I can see today where it gained acceptance. I can see where it tested. I can see where it was successful in auctioning. I can see where it failed. That is a reference point. Now let's take a look at that in the overall context of the larger swings and see where we're at. And now I can start building a plan. When I have that, I can make some solid decisions. I can maintain my patience, my composure, and my um, uh, objectivity as I'm trading. The other objective of the homework is to identify higher probability trade locations and scenarios for the next day trading, which will make up a daily trading plan. I can't tell you me, myself, and how many traders that I've I've talked to, run into, had conversations with, where they will come into the market, let's say the ES, at about quarter past the hour, 9 o'clock Eastern, and maybe later, and they get their indicators ready and their charts ready, and all they're doing is looking for an arrow to pop up, or price to cross over this line, or for these three charts to show some level of confluence in something. And they have no desire to understand the context, nor do they have time to understand the context. So building the next day's trading plan. So that was the objective of the homework. There are two components we're going to go through. The homework to get the context. Now that I have the context, I want to build my trading plan. What am I expecting this market to do? What am I expecting buyers to do if they start auctioning higher and if they start auctioning lower? What are my expectations based on this market? What are the buyers and sellers currently telling me? So the objective is to determine those areas where good risk-reward trades are likely to occur so that we can achieve our daily profit goals. And we accomplish it by using historic and dynamic, meaning current, market-generated information to identify entry and target areas. Now, what I would tell you is, I would tell you that it really doesn't matter what system you're using. This is something that every trader should be doing in order to create a consistently successful trading business. So one of the things that we're going to go through, and you're going to hear me talk about, not just in a specific statement, but as I'm actually looking at the market, the very first thing I talk to is if. You will always, well, sometimes I say should, and when I say should, I typically correct myself, because there's nothing that buyers and sellers should do. There's only what they do. And if that sounds a little bit like Yoda, then so be it. But I want you to think about this. When I start looking at the market and I start thinking about the market and looking at the market as a series of if-then scenarios, what it allows me to do is it allows my mind to allow for price to go higher and price to go lower. If I start the day with some kind of bias because I've read something or I've interpreted something that says, oh, this market's going up. Now, there may be reason to think that that it's more likely for price to go up than down based on what you're seeing in the auction. But by using if-then statements, and this is why I use them, this is the power of them, by using if-then statements, it keeps you open to whatever the market's going to do. So as I'm reading the auction, what you'll hear me say, and you probably heard me say it yesterday, if this is true, then this is what I would expect. So if this is a move, and we've just broken through a low volume area, then I'm going to expect a move back down and a test back down to this low volume area. And if that happens, then I will look to get long if these conditions apply. So keeping the if-then statements out in front of me allows me to reduce, I won't say eliminate bias, but reduce my bias and help me focus on what's happening actually in the market, listening to the market-generated information that the buyers and sellers are giving me. So the very first if-then statement is, where are we opening relative to, or where might we open relative to today's or the previous day's activity? Tells you a lot about the overnight. If the market opens out of range from the previous day, that tells you something happened in the overnight to cause the market to go higher. And what you're looking for is to say, okay, we're out of our range from yesterday. Is this cash market, the RTH session, going to accept this, or are they going to reject it? And it could just go up from here. It could go down and test. It could go up and test and move back down. What are the conditions that I would look for to start supporting any one of those. So where is the open? That's my first if then. So if it opens up within the previous day's value range, the total range for the day, maybe we can use the extremes of the value range or the extremes of the day as our first reference point. So for example, if price opens up outside of yesterday's complete range, then without question, one of our first reference points is the previous day's range. And we're looking at the open type. Like yesterday, we had an open drive. We had one tick to the downside from the open and an immediate and strong move to the upside, called an open drive. If, and this is just as an example, if you have a market that's opening up out of range to the upside, out of the previous day's range, and you get an open drive, that's a strong sentiment that the current RTH session is not only accepting price higher, but they're rejecting, and this is the other key piece, they're rejecting previous day's activity, which means you're likely to see price continue to move higher in that day. And so you start building your reference points relative to, and for if it were me, I'd build reference points relative to what makes sense in terms of a pullback or a test lower before I would take a long. And my target would be, I would look at my volume profile and say, if we're here and we're starting to build volume higher, then my expectation is this high volume and possibly the low volume area above it as a test. So I would find my entry, if then, so if price pulls back to this and the print looks like this, then I'm going to enter, and here's my stop. I'm going to put my first scale here in front of this high volume area, and my second scale up to, depending upon what happens at the high volume area, my second scale will be up at the low volume area above that. So I start building these if-then scenarios because, for example, let's say we get that open out of range, and we get an open drive. The other thing I have to keep in my mind is there anything above, like a previous swing high, that may, where sellers got real active, that may cause some issue for a long today? And if that's a point and a half away or 2 points away from where my entry might be, given the risk reward, I may want to reconsider or just sit on my hands until it proves to get through that area, or there's evidence of it struggling in that area, etc. There is no try. I like that. Hopefully that's the last thing that sounds like Yoda. If price opens outside of the previous day's value range, are you above the value range? Are you below the value range? And that's the same thing for the day's range as well. Excuse my voice seemed to be a little dry. I'm going to grab a quick drink of water and see if that will help. Okay, so I want you to understand this example of the value range. I don't want you to focus on value ranges. Value is just an opportunity. It could be closing swing high, closing swing low. It could be low volume area from the previous day's profile. So for example, if there was a low volume area from the previous day, and we had, I think, 1910.75, 1910.50 yesterday morning, that acted, it wasn't just a low volume area, it acted as an unfair low, excuse me, when price came back down to it, then that may be a reference point. So as part of our homework is identifying all the potential reference points that we would want to put into a trading plan. So value range, please don't lock in on that. It's just an example of a reference point that we might use. So the second if-then, if price moves up or down. So our first if-then is, where is price opening? And I'm going to give you a quick example right now. So yesterday, pull this over. Yesterday, the top of our range was 2350. Right now, less than 3 minutes to the open, price is at the top of yesterday's range. Right now we have a finish in the overnight to the upside, but you can see a lot of pressure to the upside as well. As price has been auctioning lower, as it's pulled back, as Draghi has been speaking, I can see that we've had what I would call in these bars a relatively successive neutral auctions. And as price has been moving up at the top of each one of these bars, not a lot of VCAs that support this move up. So at the top of each one of these bars, I can see activity coming in at the bid as volume is coming into the market, but price is still moving higher. So on the way down, neutral auctions. On the way up, we can certainly see some selling, but price is continuing to move higher. So without creating a bias, what this is telling me is that we have buyers who are not only active, but very interested in moving price higher. And there's the potential that price will, yesterday's price range will not be accepted. So I'm looking at where we might open here, and we're opening, we'll see where we open, just inside of yesterday's range right now. So if this were to test lower, looking for a potential long, what I would expect, just like we had right here, is a potential test. Look at it, came right down to VPOC. Remember what we've talked about the last couple of days? If price comes back down to VPOC and really cannot, the one side can't get it through VPOC, that puts this level up here at risk. So I have to expect that there may be a test lower. And I have to expect that possibly price will come all the way back down to yesterday's VPOC. But if we get through 25, we already are through 2350. If we have an open auction, and we're just about to open, and we can see volume growing now, I may look for an initial long off the open, depending upon what the print does. Because everything right now in the pre-market is pointing towards higher prices. So if we get a pullback in the morning, because we're opening up in range, we're opening up in yesterday's range, which is over here, and there's our open. We're opening up in yesterday's range. Where might this test back to? And certainly back to VPOC, and possibly back down to this low volume area down at 13. What we're going to go through is, what if price moves up or down, and then how to use our longer term composite to identify our other levels. And this is what the homework template is for, so that we have additional framework for our trade. So price is opening around 24. Where did it open? Hang on. Just give you this example. It's just a lot of volume right now. My system is trying to draw a lot of charts and it's acting a little slow. All right, our open was just a couple of ticks, actually one tick above yesterday's range at 23.75. Let me find my 2500 chart and I'll bring that over. A second. My system right now is really, really acting very slow. All right, 23.75 was our open. Our opening swing low was 22.75. Wow, this is slow. Our opening swing high right now is 25.75. And that's yesterday's high, 23.50. So based on this information, price opened just outside of yesterday's range. What I'm automatically looking for in the print and in the context is this market going to further accept price outside of this range? Or is it going to come back into yesterday's range? And if it does, is the move into yesterday's range just going to be a test? Or is it an actual move where it starts building volume? And in order to do that, in order to determine that, I use the intraday volume profile chart to start looking at the volume as it moves lower to determine if it's acceptance or just a test. If the volume remains very thin to the downside and we pop back above 2350 and we're growing volume, I'll bring up a chart here in a minute. That tells me we're getting acceptance outside of yesterday's range, and acceptance, with acceptance, I would look for further price movement in that direction. So that's our opening swing for the morning, 22.75. And hang on a second. And actually, I'm gonna bring this down to 24.50. The reason is because I could see buyers really trying to get through 24.50. Sellers were able to bring this back down through the open, and then there was a second swing high. Price came back down below it. So what I'm watching for right now is this tells me we have both active buyers and sellers in this market. And what I'm looking for now is what is going to be the extent of the seller's conviction below 22.75. Relative to the neutral auction, those were price moved down, and I'll just take a moment to go through this. When I talked about neutral auction, is the reason is because, again, I'm using the VCA. I apologize, my system is very slow this morning, so I'm having trouble moving even my charts between my monitors. Um, Price was moving down, so it looks like a negative auction. But as volume was coming into this market, the overall auction relative to activity at the bid and the ask was neutral. So that's what I was looking at. I was looking at simply the VCA analysis. Don't believe I still have Draghi up. Something is dragging on my system right now and causing this to be very slow, so I apologize for that. All right. Get into the homework here. Yeah, and important distinction for me, if I see neutrality in the VCAs, right? When I see neutrality in the VCAs, neutrality in a normal auction would tell me something might be changing. We see neutral auctions at the point where something is changing. So at the edges of a volume profile, if I see, let's say prices moving up, and then I see one or two bars that have a neutral auction, or meaning those bars, the VCA shows me a neutral auction, then it automatically, if I see a finish or I see participants tapering, volumes coming out of the market, automatically triggers to start watching for downside activity. And vice versa, if I have a finish to the downside, auction has been auctioning nicely to the downside, I get some bars that are neutral. The volume cluster analysis is telling me that it's neutral. I'm starting to look for evidence of further seller um, seller stepping away, more buyer conviction, more conviction at the offer, and starting to see if I in fact get that, if I have a long opportunity, and then once I get the weakness at the bid and strength again at the offer, I would look to take that trade, especially if it's in an area that's I've already planned to make a trade in. All right, let me get back to this. I need to find what is, when I take the break, I'm going to take a look at my system and see if I can find what's bogging it down right now. I will say that I have a lot of charts open, and there was a pretty hefty amount of volume so far in this open today, and I'm painting a lot of charts, so we'll see. And just real quickly, this is the overnight auction. This is the overnight profile. In fact, and this is yesterday's profile. So there's a low volume area right around here, 20, 2050. The close was back down around 1475. So if we start seeing price move much lower, especially around then 1825, where this came down, we're likely going to see settlement. Likely going to go see that that close. So I would be looking at those low volume areas from yesterday, and a low volume area from the previous days, and we're going to go through this. You can have a low volume area, but if price isn't respecting that low volume area, just don't give it as much. You don't give it as much weight. Okay. So the second if then, if price moves up or down. So first one is, where's price open relative to yesterday's activity? Second is, does price move up or down, or both? Actually, that should say or both. And this is where you're looking for a potential trade initially in the morning at specific key levels. So if we had significant acceptance outside of, let's say we were 2 to 3 points above yesterday's open instead of one tick, above yesterday's range, and price started moving lower, back down to previous day's range, previous day's high of day. Previous day's high of day is my first reference point for a potential long. So if price moves down, I'm looking for a potential long at the top of yesterday's range, and then I'm looking for the print to confirm that. Now, I also want to identify several levels of opportunity, because in that example, the top of yesterday's range is just one. And so let's say I get into a trade, it shows me I got a quick finish to the auction to the downside. The prints show me that there's weakness at the bid, strength coming back at the offer at the top of yesterday's range. Perfect setup for a long trade. I go long, and all of a sudden sellers start stepping back in and they push price lower, I either take my trade off or I get stopped out and it starts coming down. This is why we build a trade plan, because if we don't have that second level of opportunity, if you're not prepared for that, then what's going to happen psychologically is you're going to take that loss and it's going to affect you into your next trade, as opposed to saying, okay, well, if it came through yesterday's high, I need to understand if it's going to start accepting price back down into yesterday's range, or is it just going to test back down into yesterday's range? And we're going to talk a little bit about how to determine the difference between a test and an actual move and acceptance. So you can start identifying your next trade, and your psychology isn't down for the day. It's, okay, this is more information. It looked like sellers were hesitating, but they just got aggressive again. So I want to see if they're going to get aggressive, and I'm going to look at the print on the offer side. Are buyers stepping aside? All right, well, if buyers are stepping aside, it tells me instinctively that they're looking for a better price. Right? People get in to make money. So if they relent, I can see it in the print. I got, blue that shows me weakness in the print at the offer through a key level. It tells me that they gave up, at least for now. And if they gave up, I'm going to look for a place that makes the most sense where they might step in. And early in the morning, I'm using pre-market information, and I'm using yesterday's information as well. Where did buyers step in yesterday? That might be closing swing low, might be closing swing high, might be some other key reference point, like a longer term low volume area, such as that. But what it does is it keeps me in the game. If I take a loss because I had good information and that information changed, I'm okay with that, because that's just additional information for me to take another trade. So again, this is where you would identify targets using high volume areas, closing swing, etc. Again, as you start practicing this, and let's take that example, price comes back down into yesterday's range, and you start looking at that and identifying, is this just a test? Is this real thin volume? If price is coming down into yesterday's range, can I see that the buyers are really stepping aside? Do I see weakness in the offer as price is moving into yesterday's range? If that's the case, then this is likely a test, at least for now. I won't know that it's a real move until buyers step in. And where would they most likely step in? That's my next long trade. Or now that price is down into yesterday's range, and I can see that buyers are relenting. They're probably going to look for another spot to get in where they see value, and there's my spot. Maybe I have a short opportunity off of yesterday's high, especially if that has now left a low volume area for the morning. I might have a short opportunity back down towards that area where I'm looking for buyers to step in. Yeah, I'm waiting to see what kind of reaction. For today, I'm waiting to see what kind of reaction we get at that 24.50. We had a move above it and then a very quick move down back below it. And let me bring up a volume profile here. Boy, my system is slow. I really apologize for that. I just don't know why today it's acting so slow. All right, let me bring this over. All right, here's our volume profile for the day. We have our high from yesterday at 23.50. which is right there. Just going to put a, personally, I mark my highs and lows of the day with yellow. I highly recommend that you get some colors that mean something, whether it's for example, my open swing high, open swing low is in the dark orange. My closing swing high and closing swing low is in the dark orchid. Those colors have meaning to me, and yellow is my previous high and low of day. So as we look at this auction, we had a move to the upside, which came down relatively quick. I just cannot believe how slow this is. We're getting some acceptance here. I don't know if I'll be able to do this. We're getting some acceptance here with a current low volume area right here about 21 quarter. 21 quarter. The auction is moving lower. We're getting acceptance into the day. It looks like this is not finishing to the downside. So I would start looking at this swing. Swing high, swing low. I can see here we had buyers, and I don't necessarily call this support. What I call this is where buyers have enough conviction that they're going to hold the sellers. Remember, price will move in a specific direction until the other side steps in to shut that movement off. Yesterday, this is where buyers had that conviction, and the other important aspect is this is where sellers showed weakness. They relented. So as price is moving down, if this shows as unfinished, and I believe we're approaching, let me just take a look here. Yeah, I want you to see this here. If I can get my chart to come over. We have a low volume area right here around 17 quarter. You can see that. Right here. Well, I really apologize for how slow my system is acting. Right there. So here's what I'm looking at now as a potential trade. If price comes down here and we get rejection, sellers really can't get through this level. They may take it down a couple more ticks, but if we get responsive buying and we get back above 17 and we start building volume above 17, today's profile shows volume starting to build above 17. Remember, right now the 17 on a longer term time frame is considered an unfair low. If price is going to reject off of this area, and it just hit settlement or close from yesterday, looks like. If price is going to bounce off of this area, maybe not, hang on. And it's going to move higher. No, it didn't, not yet. Then where's my expectation of a target? It's right here, right? Because right now, in this price zone, this 31, looks like about 31, 30, 31, and this 17, this is an unfair high, and this is an unfair low. This is a high volume area. High volumes areas do what? Typically, as long as this remains an unfair low, you can expect this to be a magnet for price. You can expect price to go up and challenge this. If this breaks and we start seeing price get acceptance and the profile below 17, so it doesn't just come down below 17, but it actually starts making progress and starts building out a distribution, right? We start seeing volume in the volume profile. Then I may actually look for a short off of this area. And if in the intraday volume profile, there's a low volume area right here, this is what I talk about with confluence. Now I have additional confluence. So if price retests up to this level, and in the print there's weakness at the offer and strength coming back in the bid, I'm going short. However, as price starts to come down, this is the other if then, and the volume profile shows a finish, nice tapered finish to the downside, I see weakness at the bid, strength coming back in the offer, I'm going to go long. And I'm going to go long, and I'm going to watch the print, and I'm going to look to try to take my first target. I'll see what the print tells me, but right out in front of that high volume area with a potential test to this 30-31 area. And if we get volume through this 30-31 area, I'm expecting to see it at least a tag of that high volume area. And what will start occurring for me on a little bit larger time frame is we had swing high, swing low, swing high, low. I'm marking these swings. What this current context of this market is doing, right now, it's balancing down here. There's a swing low. So I'm looking at a swing high. Get rid of these now. So I'm looking at a swing high. Swing low, high, low, high, low. I'm looking for a potential swing high to here and here. If that doesn't happen, and this is where the understanding the elements and the attributes of the volume profile really help. If price can't get today through this level, around this 24.75.25, again, then and comes back down through here, if this is a swing high, then I'm looking for a new low. Because if buyers can't have the conviction to get this through this level, then the probability is when it comes down, this level is at risk. And if it comes through there, I want to take a short, especially if in the day time frame volume profile, I see a low volume area that lines up with this, and I get the confirmation in the print that the bid is weak, the offer is weakening, bid is strengthening, I'm short. But before that scenario happens, my first scenario is for a test to this level and a potential long. And if I take this trade, I'm looking to exit in front of this high volume area. And if price starts coming through this high volume area, in the day time frame, in today's volume profile, what I'm expecting is to see distribution. I'm going to start expecting to see price rotate a little bit through here. That rotation and this further distribution around 25, 26, if we get it, is going to tell me that we're getting acceptance. So if price rejected here, this is an unfair low for our market today, and we start getting what I expect would be acceptance up here, then what is this market most likely to do today? Go up, exactly. And where would I look for at least a test to? Next LVA, exactly. Next LVA, right there. At least a test there. Exactly. A couple questions here. Your system's not really slow. My mind is working at that speed now. I'm going to, looks like everybody's here. I'm going to get rid of that message. I can go through the colors that I use for my different lines, absolutely. When I refer to weakness at the bid and strength at the offer at a key level, am I assessing the final print in the last 3 bid-ask prints? I'm assessing the final one below it. Remember, as I get into that trade, I'm watching the 2 combinations of bid and ask above that or below that as well. But I'm assessing the final print. So what that looks like, come on. Wow, I just have not had my system work like this in a long time. So what I'm looking at is that combination in that bar. This combination up here. And I need to get to where we're at. So this combination down here, this combination, I'm looking at that last one. But I'm watching 2 above it or 2 below it. If I'm short, I'm watching 2 below it. If I'm long, watching 2 above it. Don't see how I can say it's most likely to go up. Equal probability of rotation sideways, isn't it? Here, well, the probability, I think in any trade you could say is 50-50. You just don't know. But I need to base my targets and my stops on something that I believe is truth. Otherwise, I'm moving my stops all over the place. So what I'm not saying is that price is going to go up. What I am saying in this is if, and I can say this because I've done this over time, but if this level proves to be an unfair low and the intraday volume profile starts showing acceptance at this level, then the higher probability is that this market's going to test up here. Does it mean it's going to? No. But the higher probability is that it's going to test up here because buyers have stepped in, sellers have said not a fair price. This would be the first most likely fair price for sellers where we might start to see sellers engage, which would create the rotation here. And if sellers don't continue to step in here and counter the move by the buyers, and we get acceptance higher, it most likely would result in a test to the upside. Yes, because that's exactly right, because it rejected the lower boundary. And that's where the if then, it's a great clarification, Peter. So that's where the other if then, right? I'm always saying if then. If this is not, or if this is unfair low, and if sellers aren't willing to commit through market orders the volume necessary to take price lower, then again I go back to my basic understanding of market participants, which is they get in to a position to make money. If sellers right now in this market context are saying, we can't make any money here because they're not showing the conviction to take price through this unfair low, if that's the case, then I expect the first place that they may show that is up here. Doesn't mean that, but the first place I would expect that is up here. And if they show that and buyers take price higher and we start to get this rotation, it results in acceptance today of this is fair price, so again, I'm in this range. If today's market shows acceptance in this area, it doesn't have to be right on it, but in this area, that this is fair price, given the fact, unless sellers really re-engage, and that would be shown by them holding this level, not having price rotate through it like this. If sellers hold this level and price comes back down, then there's higher risk to this holding the second time down. I may not be as anxious to take a long off of this area. And my if then is I'm going to watch the print. I may take a trade long still down here. And if I do that and I see any strength coming back in at the bid, I'm out of the trade. I'm out of the trade. I'm going to wait to see if we get a stop run and it pops back above, or if it continues to get acceptance lower. Because if sellers do hold this line and they push it back down and through this unfair high or low, and we start getting acceptance down below that line, I think I see what somebody was asking me. Somebody was asking me, I think, about this high, that should be up here. But if that's the case, and this gets kind of close here. We're at 15.25 to 17 quarter. That's 2 points. So I want to be careful. This is a scenario where, if price comes down to 15.25 before it tests back up to 17 quarter, if I take a short, I'm going to be really tight with my stops. And this is a trade that I would scale early on. Because if buyers hold down here and break back up through here, then they could take it all the way back up. So what I'm watching for is I'm using the overall market context, and these would be potential trade levels for me in a trading plan. And then I'm watching, let me hang on a second. I got to fix my volume profile. I'll be right with you. So right now, in the day, I have VPOC at 20.75. A little bit of a finish now to the downside. The day has put in just a little nodule of low volume area. And actually what I'm going to do is make this bigger. If it lets me. Again, something is chewing up a lot of there we go. And I think for some reason it might be the projection today. Whenever I bring a screen over here, I think that's the case, the projection. It's just not going. All right, so what I can see in today is VPOC down here at 20.75. I can see a little bit of a low volume nub right here at 19.25. So I would want to go back and look at the print and say what's really going on here at 19.25. If we move back down below it and start gaining any volume, so I might have a trade here, right here at 19.50 long. 19.50 long, looking for this to try to move back up. A little bit of a finish to the downside. 19.50 long, most likely have a stop no more than 18.75. So I'd be looking at about a 3-tick stop on that trade, because if it starts coming back down below this intraday low volume area and starts building out volume below, it's most likely now going to test 17 quarter, 17. where we saw some level of buyer interest yesterday, and I just have no desire to carry a trade that far when I can just get out of the trade and get back in down here. So the last, and this is why we look at swings, the last swing low from yesterday, not the closing swing, but the last swing low where we saw buyers step in was right down here at 18 quarter. And that's what we're seeing again right now, is buyer conviction at 18 quarter with VPOC above. So we're getting acceptance higher on fair price than we did yesterday. So I would take that trade 1950 as long as the print gave me an indication to take it. And I would probably look to scale right out ahead of this 2250, like around 22 or 2175. Not necessarily close the trade, but I would look for a test up to 2175 and possibly higher. Now, what this market has done this morning is it started just above, let's just say right at the high from yesterday, which was 2350. So it started right around 2350, 2375. Yeah, the overnight session, sorry. I said yesterday, but the last swing low for the overnight session was down here at 1850. That's correct. Sorry, I said yesterday. So what I'd look for now is a test back up to, wait, this is slow. 22, got a little bit of a low volume area here. We had responsive selling, and I would look to scale up here and then possibly higher. So the market's come down. It started to gain acceptance below yesterday's high, which is over here, 2350. So my next trade, if I didn't get in on this one, or it starts coming back against me and moving lower, might be a long down around 1725, because yesterday I can see that this did at one point provide an area of interest for buyers. If the print shows me an opportunity, I would likely take that long and give it about 3 to 4 ticks. 3 to 4 ticks as a stop. Because if it comes back down into this area, you can see a little bit of a distribution here from yesterday. We may see price come down here, and this may be where buyers start to re-engage. So again, I find my area. My latest one would have been here long. I watched the print. If the print continues to show me that buyers are engaged, I take my first profit target. And as long as they continue to get engaged and stay engaged, I'm okay with a pullback. But I'm looking for price to continue to test higher. And then I'm watching the print, knowing that this was my last swing high, 2350. I'm watching the print to show me when to potentially close that trade. Yeah, 1875, I think I clarified this, was the pre-market swing. 18 a quarter actually yesterday was the pre-market swing low. Not yesterday's. Question, why wouldn't this morning's upper boundary rejection cause a test below today's developing VPOC? Maybe you could rephrase it. I don't know that I quite understand that question. But let me ask that question again. I'll take a look at it. So I want to go through this again. The first if then, where's price opening relative to yesterday? Second if then, what's it doing at the open? Am I getting trade on both sides of the open? Where's the VPOC relative to the open? Is it starting to build higher, lower? Are we getting trade just to one side of the open primarily? So I want to see what happens. The third if then is if the first trade scenario loses. So it starts moving, we got a trade scenario. If the first trade, if the wins were good, I mean, the market's doing what we expect it to do. If it loses, then what are you going to do? What does that tell you about the market? What are you going to do? Focus on the intraday profile levels and specifically the order flow. If you had made a trade plan, for example, let's say I was looking for a long at 17.17 quarter. The print showed me an opportunity to get in. I got in long. And not only did price come down, but it started building volume below 17.17 a quarter. I better be ready to know what to do next. And that may be if I start getting acceptance below 17 quarter, I got to be careful because that high volume area is just below it. But I may decide to take a short off of 17 quarter. What I have to determine is in today's market, what are these buyers and sellers trying to do? And compare that to the overall volume profile that says if 17 area holds and buyers start re-engaging, we're likely going to see this. And then if we see this and this happens, we're likely going to see this. If it doesn't hold to the downside, and we start getting acceptance below 17, then what's most likely going to happen? And that's where I make my trade. Now, what you'll not ever hear me say is what is going to happen. I will say what is most likely going to happen. And that's a lot of the developing market structure and if-then scenarios. If this, then that. And sometimes I'll just let the market start to play out and see if it's gaining acceptance in a specific area where I'm expecting acceptance. If the market's showing true to its rotation and what buyers and sellers are saying in the print and in the volume profile, then I have more confidence in my next trade. And I may wait for that next trade. Remember, I'm managing to an objective, a financial objective each day and trying to minimize my loss. I'm not trying to get necessarily a 10-point run on the ES. I'm trying to manage to a financial objective. If you try to pick the tops and bottoms of every swing, you could wind up in trouble. All right. How do we define areas of opportunity? The value area was just an example. Low volume areas, either daily, weekly, current rotation, longer term. Test areas of high and low value. Value area is just one example. I showed you an example the other day where a naked VPOC, a VPOC from a previous day that hasn't been touched in the RTH session. Now, I want to be real clear about this. If in an overnight session, price moves up or down and it tags a naked VPOC, and the morning session, the RTH session starts, unless the RTH session does the same thing, it's still naked. It's still open. I'm specifically watching that RTH session. Just because it hits it in the overnight doesn't mean that it's satisfied. Previous days highs, lows, we've talked, in fact, this morning, if we look at the print, I'm fearful of bringing, not fearful, but I hesitate bringing my bringing my charts over now just simply because of the lag that I'm getting. All right, I'm going to try to drag this over again. At the break, I may actually just restart my computer. I may take a break earlier than later to restart my computer so that I can see if I can get rid of this. Anyway, here's yesterday's high, right at 2350. And when price came down and came back up to yesterday's high, you can see that at least in the print, weakness at the offer, strength at the bid, there's an opportunity for a short. And what this is saying is, right, if we're reading the story of the market, we had an initial open, an initial push higher. Price came down below yesterday's high of day, back into yesterday's range. We're getting acceptance into yesterday's range. Held. So in order for me to take a long now, I really need to see price get through yesterday's high with some strength and conviction. Or the 17 quarter area may be an opportunity as well for another long. But right now, that may be different later, but right now this market is accepting price within yesterday's range. I'm going to try to move this back. All right, previous day's highs, lows, closing swing high, low areas. Multiple reference points at the same area are points of convergence or confluence and provide higher probability of trade opportunities. What do I mean by that? I mean that if an opening or a closing swing low is, let's say we have a closing swing low yesterday or a closing swing high of 19. Oh, we did. Oh, that's perfect. Our closing swing high from yesterday was 1675, and we have a composite low volume area at 17. 17, so one tick apart. When you have multiple levels that come together, it provides more confluence. So when you get the signal in the print to take the trade, probability of it working, not working, you could say is 50% on any trade you might take. But if there's evidence that buyers have interest there, then there's a higher probability that they're likely to step in again. If they don't, then you know something has changed. And if something has changed, you look to see, why aren't buyers buying here again? What happened? And if they're not going to buy here, where are they likely to buy? And start managing to that information. All right. Yeah, so go back to the question. We were discussing the likelihood of price pushing higher off EPOC once it had rejected a lower boundary of distribution. Now, why wouldn't this present the opposite scenario? Yeah, if price can't get through a VPOC or a high volume area, VPOC typically would be of the day, or a high volume area on a longer term profile, then I would look for price to start testing in the other direction, and whichever direction, that low volume area is at risk. Doesn't mean it's going to break, just means it's at risk. So it's the same in both directions. Alan, if you could, I must have said something. You asked, why is that? Could you tell me the context of that question, what I was talking to? Somebody says that they've lost sound. Can you all still hear me? Okay. I'm gonna have to. Thanks. I need to let somebody know that you should log out. Okay. Why is that? I think the context of the naked VPOC is if a naked VPOC gets tagged in the overnight outside of the RTH session, um, I still consider that open. I don't consider that satisfied. Is that right, Alan? Was that the context? Yeah. Why is that? Because in my experience, that's just me, but my experience is that 80 to 85% of all the volume on the ES is in that RTH session. So the drivers of price, at least when I'm trading, mostly trading is the RTH session. I care about the sentiment and the conviction levels of that market, of those participants. So if they're not, if the RTH participants, um, let's say the naked VPOC is lower, if the RTH participants aren't willing to go down and test that and they keep bringing price higher, that's my context for my trade, is they're not interested down there. They don't consider that fair price. I'm starting to look for a long. That's why. Okay. And in the same vein, if I were trading in the UK and I really cared about trading the European session time, I actually would build a volume profile for the Globex market, and I would build one that just showed me the most current context of the European session or sessions. If I were trading the Forex, the 6E, the U.S. Euro pair, Euro US pair, I would absolutely have a volume profile that just included the sentiment of the European session. Because I really care about the context of those participants, because the context of those participants may be different than the context of the participants in the US market. And I at least want to understand what their levels are. If nothing else, it shows me what their levels are. And the worst thing that happens is I put it on my chart as a heads up, and price comes up or down to it, and it blows right through. And I would have the Globex Globex data up as well. Tomorrow we'll go through the Euro, the 6E. And context for me again, and I'm glad we're going through this again, context is relevant to the most current participants. Remember, when you hit that button to buy or sell, that is your moment of truth for that trade. You're setting your anchor And all you have is the ability to manage your risk or take profit and manage your profit if it moves in your direction. If you don't understand the context, and you can look at a low volume area and say, okay, let's say your price is coming down to a low volume area, and uh, the print shows you weakness at the bid, strength at the offer. Great. Sellers are walking away. Buyers are stepping in. Time to go long because you believe there's a higher probability it's going higher. But what's most important is the context of that print as it develops from the time you enter your trade. And as long as the print continues to support your decision, you're in good shape. But if the print, which is the most current context of the market, starts to not support your decision, then you've got a decision to make. Are you going to give them a chance to let it work and to work it out? If so, then where's your stop? Are you going to get out of the trade, see what happens, take the next one? You have a decision to make relative to your risk assessment of the context of the market at that time. Again, if you see strength, let's say you get long and you see strength coming in at the bid, you know what? That in itself doesn't say that you're going to lose in the trade. It just says there's additional pressure. There's additional activity, selling, aggressive selling, contracts hitting the bid going on. Well, what if there's another 1,000 contracts that hit the bid? More aggressive selling. Is your risk higher? Your perceived risk is higher. But what if it goes to 2,000, 4,000? But then it holds. And you can see buyers start to step in. And you know all those contracts that came in short right there are likely to get stepped on. So just having, I want to be real careful, just having volume come in back at the bid if you're in long doesn't mean your trade's going to lose. All I ever wanted you to do is say, I'm long because I saw activity at the bid going away, activity at the offer coming back, more activity at the offer, but now that selling has re-engaged. I need to pay attention to this. That's going to keep your head in the game. It's going to keep you objective. And it's going to allow you to effectively manage that trade. So context is local. I will tell you in my experience, context can change between sessions. And as we saw yesterday, you take a situation like Russia and Ukraine, you take a situation like ISIS, what's going on in Gaza Strip and Israel, any one of those scenarios, Ebola, whatever it may be, and anything, even an announcement from a major bank, has the potential to take your perception of the market and how the market is currently auctioning and set it on its side. Market can do anything at any time. And that's why, for me, I build the if-then scenarios. I keep my stops in place, because as long as I'm managing my risk, let's say I get into a trade long, there's news of some attack in Ukraine, or something in the world happens and causes the market to immediately slam down, takes out my trade, and is moving down very quickly. My first reaction is not to get in short. My first reaction is step away, make sure my cursor is not on not in a position where I might accidentally buy or sell. Take away that temptation, because I know something in the market emotionally just happened, or somebody dumped a bunch of contracts. And I have disciplined myself to immediately go to news. a news source to see if I can see what's going on. And if this seems to be random and there's no news to support the move, then I'm hanging back. If there's news to support the move to the downside, now I'm looking for a logical area for a pullback for a potential short. A lot of information. So multiple reference points at the same area provide convergence or confluence. Higher probability, better opportunity in my experience for those trades. So once you've identified the places that represent the highest probability trade locations based on the market's current context, then you begin building your if-then scenarios that will be your trading plan. So let's talk about overnight context and adding the overnight activity. One of the things we've talked about you want to pay attention to is what happened with price and volume from 7:20 a.m. Eastern. If you're trading the US RTH session, you got to start paying attention to 7:20 to 7:30 Eastern a.m. because that's where the US market participants start entering and start positioning. And you start to look to see if the sentiment from the overnight is the same or if there might be a difference. Pre-market moves that are not based on news provide insight as to potential sentiment for the RTH session. Remember yesterday? Yesterday was a perfect example. We had that volume profile with that little nub down at, I believe it was like 05, 1905, 1903 quarter, I think was the number, 1903 quarter. And in the 1 minute chart, a significant amount of value came in to push that up. It was really evident that a longer term participant stepped in there and then held and continued to push price up. The fact that VPOC was sitting around a longer term low volume area, I've just disciplined myself to stay hands off. But what it likely meant in the pre-market was that we were going to see price continue higher because somebody stepped in with a significant commitment in a long position and said, no, 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 we're not going lower. So that provides context. Now, if that level gets stepped on and price comes through there soundly, then you can probably expect to see price move back down into the 1800s and lower. So pre-market news, you guys have asked me about that. We want to consider pre-market news or any news activity. First thing we want to identify was price impacted by the news? If so, did price return to its location back to where it started before the open? If so, continue with the plan. If not, price didn't return, it's in a new area, we can see volume growing, then we identify the price where the move took place, we confirm that volume push and ongoing support, let's say it went higher, ongoing support by buyers, we mark that area on your chart as a potential trade location and you update your plan to say at the open, if price comes down to this point where in the pre-market we can see buyers holding after this move high, and if the print tells me I may have a trade there long. If price wasn't impacted at all on the news, you just continue with the plan. So what I have here is a workflow and relative to context, when I consider news, I consider news to be a trigger to create emotion in the market such that the normal auction process where buyers and sellers are interacting to drive value, define value, test higher, test lower, Whenever there is news event, that can create emotion in the market. My experience is that the normal auction process is set aside. And if I'm using the auction to trade, and the auction, I don't want to say the auction process, whether price goes up or down, technically the auction process is what facilitates that price movement. If the normal auction structure where it's creating value, building out the profile, is at risk, I typically will step aside, because you never know, you never know anything, but volatility is quite a bit higher. The potential to get stopped out on trades, to get whipsawed out of trades when emotion is higher, and there's no apparent footing. There's no real obvious place where sellers are going to fail, buyers are going to fail, sellers are going to have conviction, buyers are going to have conviction. When that happens, then your ability to stay objective and manage your risk is minimized significantly. All right, we're going to take a break here in a few minutes once we get through this. So here's a workflow. You get news, pre-market news. This is relative to your trading plan. So on Thursdays, we get a lot of pre-market news. This morning with Draghi, we got a lot of pre-market news. Was price affected by the news? No. Well, then you just continue with your plan. You're done. News didn't affect. Stay with your plan. There wasn't any additional volume. There wasn't any additional reaction. No need to change your plan. If price was affected by news, then before the open, did price return back to that previous area where it originally started? If the answer is yes, the auction kind of returned to its where it was auctioning prior to the news, then continue with your plan. If the answer is no, then you need to identify price where that move happened. Where is the price where price took off? Where it started going higher or lower? And then you want to confirm volume support of the new area, whether it be higher or lower. You want to see volume being built out. You want to see rotation. You want to see a volume area growing in that area to confirm acceptance of that new area and support. The other thing you want to check is during that news, did it cause price to pass through a key low volume area or high volume area? Let me give you an example of that. As soon as my charts come up, show you what I'm talking about. Okay, so we have a low volume area on the composite chart here at 17, and there's another one up here around this 31 level. Let's just say, for example, news hit this morning and ECB said we're adding 25 billion in purchases every month, and they raised their participation level significantly, and price shot up beyond this 31 level. And in the pre-market, we started getting rotation around this 33.50, 34 level. So that news pushed price up through this low volume area, especially if there was a test lower that failed. If we start seeing acceptance above here, above this level, and we're seeing rotation in the pre-market now, and any attempt to the downside is met by buyers here, that's what I'm talking about. Did price come through a low volume area? Come on, there we go. And if the answer is yes, then update your plan to reflect the nearest low volume area or high volume area. So if that were the case, then what I would do is say, as part of my plan now, I'm looking for a long off that 30 to 31 area. And I would look to see if there was any additional confluence, anything else that might suggest that buyers were going to step in at that level. And then I would look for the print to confirm. And if the print confirmed, I would be long. I would be long, and I would be looking for my first scale out ahead of the next highest high volume area. All right. Can I show the print I'm looking for to take a breakout trade? I don't want to say rarely. In the course of my trading experience, and I think oil has conditioned me on this, is I'm not a big fan of breakouts. Price certainly breaks out and breaks away, and we get a new probe, exploration of new price. What I like to do, because I found it to be more consistent in terms of my risk reward, is if price breaks out into a new area, that's fine. I'm looking to see where the low volume area is, and then let's say it breaks out to the upside, and then I will take a long on a retest. I will take a long on a retest of that area. Or if it doesn't come all the way back down to that area, but it's coming lower and I can see the bid failing, offer getting stronger, then I'm getting back in. And the reason is because if I take a breakout, what I don't know is if it's going to be a stop run. And I can tell you this, that up until 2013, when our markets just straight up, I rely on the market to provide rotation, right? Normally, 85% of the time, the market is in balance. 15, maybe 17% of the time, so 80, 83, 85%. There's a much lower percentage where the market is in discovery mode, which is breakouts. And so if you're looking, or a breakout is a style of trade, that's fine. It just means it's likely to happen less. And in 2013, because I depend upon a normal market rotates, just because participants have to liquidate inventory, the market rotates. If nothing else, the market moves back down because buyers have to liquidate contracts. They release their inventory, which makes them sellers. And so many times, trying to take that trade with a move back down on the ES often just meant that I gave my money away. So what I've conditioned myself to do, instead of just taking the breakout, let the market go, let it prove that it's building volume, that there's acceptance above this level, and then take that on a retest, or when on a pullback or a retest. Can I make that chart available on the website with all the other materials? Oh yeah. Yep. It may take me a little bit today because I don't have it to DB. I just need to pull this off on its own slide, and I can make it available. Yep. Let's do this. It is 10:48 Eastern, 9:48. We've been going for almost 2 hours. So let's take a break and come back at the, say, the top of the hour, and get going again, because I still have more to go through relative to the homework and building the trading plan. And we just hit our 1750. So let's take a quick break, come back at the top of the hour, and we'll get started again. I gotta at least check my services on my machine and see if I've got something running in the background that's killing my CPU. So I'll come back at the top of the hour. All right, I'm back. Go ahead and get started again. The only thing that I could see in my system was my news service looked like it might have hung and was causing a problem. So I've closed that. In fact, I can't reopen it. So I will, hopefully we'll have better results here now. All right, so I will get this chart, this page, in a format that can be provided. Let's get back to this. Again, did price pass through an LVA or HVA? Talked about that. I'm talking to something you've identified as a key level. Did price go through that? So you just need to identify the price that was affected by news, and then update plan to reflect the pre-news. So this is a workflow that I have, and that I guess I've kind of accustomed myself to going through this workflow. I don't need to have it in front of me, but I use this now on a regular basis with news. Even if it's news after the market is open, pretty much the same thing. If we hit news and price moves with a volume spike, I'm sitting on my hands. I am not just taking a trade long or short. I'm waiting to see if price pulls back. Always waiting to see a pullback on news before I do anything. And it's very similar to what I do with the open. It's very similar to what I do with the close, which is regardless of whether price moves higher or lower, I want to understand if where the conviction levels of the buyers and the sellers are. So let's say it takes off to the upside anytime news hits. We get a push to the upside of price with higher volume. That's great. I want to see that push, and I want to see where they're taking the conviction to. And then I want to see the pullback, and I'll look at the print and measure the pullback to try to understand, is this a truly just a pullback, or is this the other side starting to re-engage the initial emotional move of news? And based on what I'm reading in the print, so for example, if price moves up and then it starts coming back down, what I'm looking for in the print as it's coming back down is, are buyers still engaged, or have they just stepped aside? Is the right side of my order flow bars all blue? Are they blue, 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 blue? If so, that's signaling to me that the initial push, they're starting to liquidate some inventory, and the higher probability is that this is there'll be another push to the upside. What I'm going to wait for is to see where buyers start re-engaging. If, however, the price starts coming back down, and the print doesn't just show weakness, it shows buyers continuing to buy, but now the strength at the bid is stronger and is actually pushing price down, then I'm hands off, because now we've got an engaged seller or sellers engaged, and what I want to see is how far now will they bring price until I can see in the print that they're either giving up or they've taken price back down to where the move initially started. Yay. I took a short while we were on break. And that is I wanted to short at 1675. We got back up to 1650. I could see the seller starting to re-engage, so I hit a market order, got filled at 16 quarter. Remember from yesterday, this 10, is it 10? 1075 was an issue yesterday, and I'll tell you, if price comes down through 1075 today, we've got we got room all the way down to 07, 06, 07, back down towards yesterday's open. So sorry about that. That occurred. Well, I'm not sorry about it. That occurred during the break, and I've got my stop now nestled very comfortably behind this selling cluster right here. Got some momentum dots to the downside, so I'm going to let it run and just wait till I hear stop filled or order filled. And the reason I took that trade is when we look at the volume profile for today. Again, sellers were struggling with this area at 1825. It passed through the 17 area. And remember, I talked about this scenario. If it passes through and leaves a low volume area, look what I have on the day now. I've got a daytime most current context. I have a daytime time frame that lines up to the tick with my longer term low volume area. So right now, my intraday most current participants are saying this is an unfair low, unfair high, it's a low volume area. And the longer term ones are saying that as well. So I was looking for a trade up here a couple of ticks ahead of this 1675. When the print confirmed the short, I just got out. Now, the thing to note about this is that this area right down here, if you look here, it's a little bit of a low volume 1150. This 1150 to, especially right here, 1075, this really held yesterday. So this initially held, then we had another low volume area right here at 1150. And look what just happened. So my expectation now, if you can see a finish to the downside, if these really are buyers stepping in and we're seeing some good responsive buying, we should see price at least tag 15. Yesterday's VPOC. And what we'd want to start doing now is watching to see if we get rotation around 15, somewhere around 15, and price will start growing, or volume will start growing, and we may get another full distribution here. If we get a distribution here and price pops back above 17 quarter with a lot of volume, I may look for another long on a retest. We may not see another retest of 17 if it breaks back up through there, but I might look for a long on a retest. So again, what's happened is sellers have taken this through, left a low volume area for the day. I love these setups. Looking for a short, taking them back down to previous day's area where we saw buyers step in. Remember, this is for this area. This is the most current context we have. And I'm glad we have this example right now, actually. This is the most current context I have for buyers and sellers at these prices. 1150 down to 1075. And right now we can see, right now, I'm not saying this will hold, we can see this area holding. And if it doesn't hold, if price gets through that level, then I would start bringing in more data. You know, below 19, look for this area down here. Below that, I would start looking for this distribution. Oh, my charts are working so much better. I would start looking for this distribution. And where's the next place? If it gets down below this area, 1909, and it starts building volume below, where would the next place I would look for buyers? Oh, you're short 16, Gary, good job. Where's the next place based on the auction from yesterday? Exactly. Perfect, Nestor. 1903. 1906, actually, 1906.75 is a place where I would look. That's a good answer too. 1906.75, this low volume area. But if it started building volume out right here, down here, then I would look right here. Exactly. Exactly. So can you kind of see when I'm trading, what I'm doing? You know, when price starts breaking down in another area, we had price over the high from yesterday. It rejected that. It created a ceiling, right? We had responsive selling. We started getting acceptance lower. Therefore, my eyes moved to this low volume area right here for a potential trade, either long or let it come through for a short. And if it comes through for a short, I'm looking at this area here and here as targets. If it gets through that area, now I'm starting to look down at this 1906.75, 1907 level. And if it gets through that and starts building volume down here around 1906, like it did yesterday, then I'm expecting the trade to go back down towards 1903 quarter. And that's how I can hold my position. And my stop is sitting right behind 15, which is a little higher than an intraday selling cluster. And I'll get into that. Somebody asked me a question about that. But if we're going to start to see a test higher in acceptance, we very well may see that test to yesterday's VPOC. And this is where price may fail. So I've put my stop in behind it. And it doesn't look like it's done going testing. It doesn't look like it's done testing. I don't want to say higher, not higher for the day, but a little bit higher. So do I look at the print after the candle ends from a weakness strength standpoint? I look at the print as it starts approaching my level. So as price started approaching 16, I started watching the print for weakness. Saw that weakness at 1650. Yep. Can I explain selling versus buying cluster? Yeah, I can do that here. So you know these are the clusters, right? In red, I call it a selling cluster. You can't really. It's not technically a selling cluster, and I probably should term it something different. What all this means is in this bar, this is where the most volume came into the market. And of those three prices, the overall connotation, the overall context for that volume was at the bid. That's technically what it means. On this bar, here were the three prices where the most volume occurred for this bar. and the context for that volume was at the offer, more at the offer. So they're not really buying or selling clusters. And if DB, if you've got a better way to explain it in terms of these, that would be fine with me. But that is what I'm. Look at this, right down back to 1050. Remember that from yesterday? 10 and a quarter, 1050. Let's see if it breaks through. So that's, this is neutral. It just tells me that of the volume coming into the bar, the volume was overall net neutral, kind of for the majority of the volume. Not necessarily that selling was the cluster. Selling was the outcome of the cluster. For where the majority of volume came in, the outcome was either more to the bid or more to the offer, or about even. A super cluster like in weather, yeah. Stay away, stay away. So this auction right now doesn't look extraordinarily finished to the downside. However, this is a key level, and I have a feel this auction is not done here or here. So my best bet is probably to just close this. I mean, again, it would be great to take this thing all the way down, but I know that I'm going to sit there and watch this stupid thing, and this doesn't look finished here. The profile looks a little less finished, but this was such a key area from yesterday, and the way that this bounced like this, I can see, look at the activity at the offer, at the bid rather, 36, 48. This is pathetic, right? So any kind of volume at the bid, I meant, look at the volume at the bid. Any kind of activity at the offer, when the bid is like this, is going to make price start to go up. So why give it away? Plus, like I said, I'm a trader first, and if I sit there and watch a stupid thing, I'm not gonna focus on the training. But what's interesting is look where this came down to, right? The first bounce that we had was right in this area, this first area right here. And then the second one, our low volume area from yesterday, 1075. So I don't necessarily look at this and say, I'm going to go long at 1075. However, it may be a target. It may be a good stop and reverse area too. However, with that print as heavy as it is to the downside, it becomes a better target. So I could have just put my last contract offer ahead of that level. But the reality is if it came through there with any kind of volume, we were probably coming down to test 675. This is from a previous day, so I'll get rid of that. Anyway, I'm kind of glad it occurred over the break. Otherwise, I never would have seen it. Kind of fortuitous. All right, so again, I'll get this out to everyone. So building a plan for today. Let's talk to that a little bit. Hang on a second. Close my. Building a plan for today. Now I want to introduce this document. This is the homework sheet. And this is, you can take this and do whatever you want with it. Okay? You can modify it, you can add things, you can do whatever you want with it. But what I want to get you to see is to create something that allows you to begin to capture the context, the information of a specific day so that you can appropriately analyze it. So, and this gets back to a question from the beginning of the day, is what I did is I identified what is the open, what was yesterday's open, where was it? Was it in or outside of previous days? Bring this over. See if we can do it this way. Oh, you know what? I just remembered I have an RTH only session. Let me bring that over. There we go. That's much better. So this chart shows the volume profiles for just the RTH sessions. So when and some of these overlap a little bit, just simply because where they start with the OFA bars. But when I look at the open from yesterday, down at 0550, it was well outside of previous day's value. It was outside of previous day's range. Okay? So I want to identify, was it outside? Because I want to know overall in the day, what was the conviction level? And what you can do in here is just put outside low. So this tells me that the market opened up outside of the range and to the downside. The opening swing high and low I put in because I want to understand the initial spread by the buyers and sellers. It was about 2.5 points. And then I put in the IB because what the IB tells me and the spread of the IB tells me, this was about 13 and a half points. If I have an IB of 6, 7 points, first hour of trading can't generate more than 5, 6, 7 points of range. And I have an open drive. When you think about what that's saying is there's an open drive, conviction to, let's say, the upside, conviction to the upside, but after an hour of trading, you've got 5, 6 points, which isn't significant. Then there is potential all the time, but there's a higher probability now that if sellers do engage, that they could bring price all the way back down to the open, if not back down through the open. Now yesterday we had a 13.5 point IB. When I have an open drive like we had and 13.5 points in the first hour of trade, that tells me something significant about the buyers from that low of day, or that low of the IB at 1905.25. Tells me a lot of them. So I'll also then put in where the close is. And did it close inside or outside of value? The other thing you can do is when you look at the close at 1475, value being up to here, where did it close relative to value? It closed in the lower portion of value. So you could put that as additional context in there as well. And this is going to start giving me context for my analysis of the day. My closing balance or closing swing high, closing swing low, what was that point range? If there was and 2.25 points is not significant. It's about average. But if I had a 5 point or more closing swing, what does that tell me about the end of the day? What happens at the end of the day, right? If we were long all day and there was a 5 point closing swing to the downside, that tells me that all those buyers didn't have enough conviction to hold price overnight, and they all bailed at the end of the day. So what that tells me going into today, if that were the case, is that my last context of the RTH session yesterday is that buyers bailed. They didn't have conviction to hold this. So they need to do some proving above closing swing low, above 1450, and specifically above that closing swing high, because they bailed. Then I do the overall swing for the day, and here's the way I use this information. So the overall range of the day was 18.25 points. The IB itself was 13.5 points, which means that after the first hour of trade, all the buyers could muster was another 5 points, almost 5 points. So after 13 points, 13 and a half points in the first hour, they could only get price another 5 points, 4 3/4, whatever that comes out to be, for the rest of the day. So that tells me, because, and look where VPOC is from the day yesterday. It moved down here, 15.25. But what that tells me instinctively is that there was a high volume area up at 20.75. The close was down at 14.75. 13 points at the open at the first hour, and only 5 points for the rest of the day. Buyers are really having some issues with conviction. They're having issues with conviction up beyond this, into that, beyond that level of yesterday's high. So if buyers had conviction, meaning they expected price, they continue to see value higher, there is a high probability that we would have closed somewhere around this high volume area yesterday, not all the way back down at VPOC. Closing back down towards VPOC for the day after all of this activity and 18 points on the day says we definitely have buyers, they have conviction, but it's an uncertain conviction right now. They're not willing to put their money where their mouth is above this level. So that goes into part of my analysis. David, when you said never mind, is it because I explained it or because I didn't explain it? Yes, the question, can I explain outside of range? Oh, okay. Thank you for clarifying. I didn't want you to say never mind because I just didn't get to your question. Another question. So 7 points versus 13 points of IB tells us something about the commitment of traders within the local context. Absolutely. Remember that the theory behind IB, and it used to be something that was much more reliable. It's not in this anymore in this market. But the concept behind the IB, and it was more than a concept, it was pretty founded in reality, is that the majority of the trade for the day, or the majority of the trades for the day, 70-75% likely were going to be within the IB. And that the first hour of trading is really what set the extremes for the market. And here's a little tidbit I'd tell you, okay? I don't have this on a chart. I don't have this in a presentation, but write this down. And this is why you want to mark the IB every day. The high and low of the first hour of trading. If you ever get, and I'll say it again, but if you ever get an intraday low volume area at the top or bottom of IB, which means now price has gone through IB, either to the top or the bottom, that's referred to as range extension, range being the IB range. If you get a low volume area that lines up with the top or bottom of IB, and you're starting to get volume on the other side of IB, take that trade just in front of IB, just in front of that low volume area. If the print, well, don't just blindly take it. If it pulls back to that low volume area that was IB high or low, let's say it pops through the top, price pulls back at or near that low volume area at the top of the IB, and the print gives you confirmation to go long, you get weak at the bid, strength at the offer, take that trade 10 out of 10 times. That is an awesome trade. Does that make sense? Show you a visual. Let me see if I can get a visual here for you. Yeah, I can. You know what? I'll just write it down and I'll give it to DB to put out there for you guys. It's just something that came to me. Let me find a day where that was true, where there was a low volume area at IB. Hang on, just let me take a look. All right, it looks like Monday, IB was 1920 to the downside, 1925.50 to the upside. Right there. So that blue line was the top of IB on this day. You can see the low volume area. And in this case, price didn't pull all the way back. You got to wait. If the print, when the print tells you to go, you got to go the best trade because your risk reward. The best trade would have been around 26, but there was also a low volume area right here. So 26.50, 26.75. You look for the print to confirm a trade long, and you take that trade long. If the intraday participants tell you that this is an unfair high or low, then take that trade. The only exception to that, the only exception is if price moves up beyond the IB 4 or less ticks and finishes. If it does that, 4 or less ticks, don't take the trade. You want to see volume starting to build either above or below it. I'll write it down. All right, I'll write it down and give it to you guys so you don't have to. It just came to my mind. If it pulls back to the IB high and it's a low volume area, go long. Yes. Yeah, I'll just put it in a document and set up the trade scenario and get it to you guys. How's that? Okay. All right. All right. So let's keep moving here. So I keep adding to this chart. And again, 18.25 point day is a pretty big day on the ES. It's above average. A 13.5 point IB, way above average. The average IB is going to be around 7 to 8 points. And that's if you look at over the last 10 years, you're going to see about 7 to 8 points as an average healthy IB. If you start getting down an IB that's 5 or 6 or 4, be real careful. Anything can happen at that point. If you get a large IB with an open drive, that tells you significant conviction. And not just significant conviction, but the other side abdicated. They relented, they got out of the way. So not only does it show conviction on one side, It shows weakness in that area on the other. So to have price today come back down to this area, to have price come back down, if it got through that that low volume area we had from yesterday, that would be a significant event, because this is where the buyer showed conviction yesterday. So I populate this, and of the pieces of data that I look at to analyze the day, the relative open and close, where did it open, where did it close, and where is the VPOC? The only other thing that I would tell you you could look at would be volume. I'm glad I took this trade off. It did come all the way back up to 15. All right, yesterday's VPOC right there, 15, what it does. Does that make sense why I would come back and test this area, 15? Right? If it's going to rotate above 15, got a low volume area here, got one here, got one here. Today, 17. It's also a composite long-term low volume area. Likely to be activity against this 17. It'll be the second touch up there. But if it starts getting through yesterday's VPOC, we're already starting to build some volume here. This would be the next place I would look for sellers to step in, is this 17 quarter. And like I said before, if this gets run over by buyers and starts moving higher with volume, I would just simply look for a long off of this area back up here, 2075. So I'm out of this trade, and if I were trading, I have two trade scenarios right now, and that's actually three. Potential short up here at 17 quarter. Potential long if price comes through and retests. I have my target. If I were to take the short, I have an initial target, and then let that see if it'll go lower. My other trade scenario is if this comes through this level at 10 quarter and leaves an intraday low volume area right here, I would look for a short on a retest, taking that back down to 875 and that 675 level. Does the auction down look finished? Let me just take a look here. Yeah, it looks finished. We got a low volume area here of 1125, and what you can see in this bar is this low volume area of the day, which lines up with yesterday. Price came back up, tested down, and look where it turned, right at that low volume area. So it's finished below that. I would not consider this auction open to the downside again until we got beyond, 11, 1075. Just simply because not only of this low volume area right here at 1125, but now what price is done here. And we may actually just start to see a little bit of, with that move, a little absorption, little coiling on the ES. I don't know that that's going to happen, but we may start to see this start to coil. We'll see. But I would not consider this auction reopen until price moved back down into these areas. And we are getting volume now here at 14. Now, it doesn't mean that I'm automatically going to take a short if price comes through this level. But if the selling cluster or buying, if we get a buying cluster, this is developing bar, get a buying cluster down here, it could just coil here for a little bit. Does that make sense though? I'm not considering this auction re-engaged to the downside until this is engaged again. Now, the fact that price could not get up through yesterday's VPOC makes the upside suspect, and I don't have a trade yet, but suggests that the downside is more at risk than the upside. But anything can happen. That's why I'm waiting. Double distribution day, possibly. We may still see a distribution below this level. Back down to the 675, 7 level. But again, I'm out of this trade for a couple reasons, but I'm out of this trade. My stop was at, I think, 1525, so I would have gotten taken out anyway. But I want to be real clear. I have no trade. I have no trade until 17 quarter, or this re-engages the short side, the downside, and this starts developing another low volume area where I would look to take a potential short on a retest. And I would look to the print to help me manage that. A couple of questions here, legitimate questions I want to get through because other people probably have these. Can I go through the process for how you determine whether you think the auction is finished? Yeah. When I look at the top or bottom of the day, I'm going to try to make, look at that. So much better responsiveness. That was my my browser. One website was just crushing my system. Anyway, when you have a finish that looks like this, and then it pops above this low volume area, and then it begins to hold like this. Are those marks showing up on the screen? I'm trying to write on the screen. Can you see my lines? No? Okay. I don't know why that is. Well, I might as well see if I change color. Oh, you can't see that either. All right. Well, let me just circle it then. So this low volume area here at 1911.25, and I've talked about this before. 1, 2, 3, 4 ticks below this low volume area, and it popped right back up. If you ever have this scenario, it looks finished below this low volume area. You've got 5 or less bars, and they all look finished, and price pop back above that. If this holds on a retest, then I consider this done to the downside. If you don't have this low volume area, let's just say you had this nice taper all the way down, and we got responsive buying, which is fine. You expect inventory liquidation. People are short. They're going to start releasing some of their inventory to take profits, so expect price to come back. That's a natural swing of the auction, and that's fine. But if it comes back and now attempts lower, and it ends here, buyers start stepping in at 1075 and starts moving up again, then I'm giving a little bit more weight to the fact that this might be finished. And in my mind, what I'm saying is I don't consider this auction re-engaged the downside until sellers can take price back down into this area. And then in the print, I want to see more activity. The next time it comes down, you can see these numbers here, 221, 273, 12, 126, and then 737, which is a little bit bigger down here. You can't see those numbers. Way too small. That's a little bit better. 1269, 737. I want to see this, and not just at this level at 1025. I want to see at 1075, 1050, 1025. I want to see the bid getting pounded. Right now, all this tells me is that buyers held. And this tells me that I have a long potential right here. I'm not taking it because, again, once I get into a trade, I'm focusing on the market. So this is telling me right now that the buyers were holding, popped up. I want to see a lot more activity at the bid. And it's perfect. So I pop back over to my volume profile. I see a low volume area here at 1909.75. I've got volume growing, and there's potential for further movement to the downside. When I look at previous day activity, I might start to see 1908, but this 1906.75 is a composite. Actually, 1906 is a composite low volume area right over here. It's a longer term low volume area right here. I can see this. Let me see if I can make this bigger. I can see in my profile this kind of broken teeth. This is getting a little choppy. The volume right now is really thin. So if you ask me if this auction is done to the downside, I would tell you that I would look for a short around 11, 1075 to 11. Right here, you see this low volume area right here? I would look for the print to give me a short around 1075 or 11. There it is at 1050. The reason I want it here and here is just simply because it's less risk. Because if price pops up to about 1175, I'm done with the trade. So it bounced back up to 1050, gave another potential short. $10.50 is a little bit of a low volume area. The reason I said 11 to 1075 is this just provides less risk for me because I'm out on the other side of this low volume area. I'm out. Is it a potential stop run? You know, I'm looking at this and, you know, it was, say, 10 and a quarter was that area from yesterday. And there was a lot of strength then into weakness. So potentially a stop run. But when I looked at the profile, it was relatively choppy. Now, it's very thin. This data is very thin relative to up here. So to some degree, if I were to start to see this profile build out right here, and I started seeing more volume, that would tell me we have acceptance down here, right here. And that would make me feel better about this short extending. As it is, if price gets back above that 1125, then this could be just responsive buying, and we'll see this thin strip remain for the whole day, and we'll move up back towards 14, 15, if not higher. So this is the key level for me right here at 1125, 11. And if it gets through that, then I would look to see what happens on a retest. If this holds, then I would consider this finished for the day. So that's my thought process on, what I consider finished and an auction re-engaging. I hope that helps answer that question. Did I change my font for OFA? These fonts here, I don't believe that I did. I don't believe I changed my font. All right, we're up at this level now. 1125. I don't see a lot of strength coming back in at the bid here yet. 1150. I see strength at the offer. Nothing in here right now tells me to go short. I mean, there's weakness here, strength here, getting a little bit more strength back here. Now we're getting a developing selling cluster. So it's possible this will tick down a little bit. The only thing I don't like about a short, and a short may work, and again, you got to take your trades where they come. And this is an area we looked at, so it's a potential for a trade. We have a little bit of volume here at 1075 and 11. I really wanted to see more volume growing down here. The fact that it popped right back up in this thinner volume tells me that this could have been more of a stop run to the downside. Buyers, there was a release of inventory, but sellers didn't engage here. They did engage up here, which is good, but I would have liked to have seen a little bit more volume. That's all. But the trade is the trade, and this is the level that we identified. So it showed a potential short selling cluster here developed. Would have been a good opportunity for a short. And again, I'm not going to take, tomorrow I'll take these trades. I'm just not going to do it today because tomorrow I got more material to get through in terms of building the trade plan and doing the homework. And if I start getting into trades, I'm going to be focusing on the trades. You're going to be focusing on the trades, and I'm not going to get through what I need to get through. All right, so building a plan, we put those numbers in from the previous day, and then I start to interpret that information. So I go to this, actually I add just a little bit more information to my data. And what I do in this chart, and again, you can use whatever chart you want, is I go from the close. I take the close from yesterday, which is 1475. And in the day time frame, daily, I'm looking to see what were the high volume areas and low volume areas above and below 1475. Because these start to become my reference line. These start to become my target areas, potential targets, and these start to become my reference line for trades right here. And then I'll go out to a midterm. So I will take this chart and I'll start identifying low volume areas above the close. So if the close is 1475, then the next highest low volume area is this 1725, and actually it's a little bit of a range up to about 18 a quarter. So I put that as a range, 1725 to 18 quarter, which lines up with yesterday's low volume area. So I've got some confluence, convergence, confluence. Where do short-term, longer-term participants start to agree? And then I'll take, you see this 3075, that comes right from here. The next one, 3750, comes right from here. And then the next significant one I have really is up here at 4475. And then I do the same thing with the high volume areas. So what that looks like, what I've done is I have my longer term composite. I've put my levels in, and now I'm taking those levels to give me context above and below today's close, and I'm popping them into this chart. And this is how simple this is. What I'm starting to look for now is I'm starting to look for numbers that match up, that line up here. If they don't, they don't. But where I have agreement, or these numbers are pretty close to each other, that starts providing more confluence for me, more opportunity for more confidence in a trade. That in this case, 1917 quarter, 1918 quarter is going to provide a good unfair high, unfair low response from buyers and sellers the next day. So that's a key level for me. Does that make sense? So once I've got this chart filled in, and I'm also looking at how is my week developing, then I move on to this trading plan. So somebody asked me about this earlier today. So what I'll do is I'll create my commentary on the day. What happened today? Well, we had a strong open drive with VPOC near the middle of the day. Right? Let me pull this back so I can show you what I'm looking at. Price tested higher several times, but could not gain the necessary volume up here and acceptance to maintain price above low volume area at 1725. So it closed lower. The VPOC yesterday, was within a few ticks of the previous day, and the settlement would suggest that the market is waiting. So somebody asked me this morning, here was VPOC, and the previous day's VPOC was like right on it. What do you make of that? Well, if the market would have closed up here, I would have said buyers have conviction. They were long and they held all the way through to the close. The fact that this closed back down by VPOC yesterday, 1475, suggests that this buyers were buying. They tested. Towards the end of the day, they bailed, got out of their trades, and let the market settle right at fair price. So this suggests strongly to me that the conviction level of the buyers above this level, at least today, is not strong enough to maintain higher prices. So when you see a market close at VPOC that's the same as the day before and maybe close to the day before, and the market is closing around that VPOC, a really strong sign to you that this market is waiting for something, especially within over an 18-point day. So likely this market was waiting for the ECB this morning and jobless claims announcement, especially the ECB, to see what they were going to do. And they held pat on what people expected. The intraday LVA at 1910.75, that held well once price moved above, and very strong responsive buying came in during the pre-market at 1903. So I put that in there because as I'm about to develop my trading plan, I want to note that at this LVA at 1075, it held well. Held, I think, twice, 1075 and then 1125, once price moved above that level. So this tells me that buyers have conviction today at this level. So it becomes an area that I'm interested in if price moves back down there. And then strong responsive buying came in the pre-market at 03 quarter. Another area that if price moves back down towards, I want to pay attention to. Doesn't mean I automatically go long there, but if buyers re-engage, and sellers fail back down at this level, I need to go long. Very good overall volume for the day, and very good range, over 18 points. However, the close back to the middle of VPOC would again suggest buyers were not willing to commit to higher prices. One of the things we saw in 2013 is the vast majority of the days, I don't know what the percentage is, but it was a majority of the days, saw some degree of test lower in the morning, only to have the market close higher in the rest of the day, close higher. And if yesterday we saw at the end of the day this market close higher, what that would have told us is buyers stepped in from the get-go. They held their positions all the way through the day, and even up into close, they held their positions. They did not let go. That would have given us a strong indication that these buyers are continuing to see value higher. Does that make sense? And that goes into your context for building your trading plan. So while buyers were not willing to commit today, they were definitely aggressive, and what did they do? They still held. Right? Buyers still held 15. So when you look at the overall day from yesterday and you see the initiative buying down at these levels, 5.25 from the open, 5.50 from the open. When you see that initiative buying, the context for the day is, yeah, price came back down. They didn't have conviction above that level very well, but they held VPOC. They didn't let this thing come all the way back down into this initiative buying level. So that tells me if price does get back below this 1075.11 quarter, something has changed from yesterday. And we might see price continue to slide back down to that 550.03 quarter level. So we're getting a little bit more volume below here. You can see price came back up to 1125, moved down, created a new low. I couldn't even begin to think about going long anywhere, even down here, unless price got above this level. Because as I did my homework, that level became context for me. It became an important level at 1075 to 11.25. Now the other thing this provides you to do is the ability to do a monthly overview, weekly, if you want to make comments to that. And then we start building our scenarios. Remember, first part of our scenario is if price opens up in value. So last night, if I'm doing my homework, or as I'm doing my homework, I'm looking at the day. I'm looking at where price pushed up to the high of day, and I'm seeing a pretty clear distribution or low volume area around the 17 level. The 17 is still a good level, valid level. So now what I start doing in my first scenario is if price opens up above 17 quarter today and comes down to 17 quarter, I'm going to look for an opportunity to go long. That's my first scenario. If the print gives me the message to go long, I'll look for a long there, looking for price to move back up towards the high of day. If it doesn't, if it comes back down and it doesn't give me the information to go long, keeps pounding at the bid, and comes through 1725, then I will look to take a short off of that 17 quarter level. And that was the short I took over here. If price opens up out of range or out of today's range, yesterday's range, then what I'll look to do, depending on how far it is, if it's hard to anticipate a scenario that says it's going to open up one tick out of range. You're going to have to start, modifying the plans, and this is what we're going to do tomorrow. We're going to have to start modifying the plans as you get a little closer to the day. If it opens up one tick out of range, yesterday's price range, there's nothing you can do with that. I mean, your first trade scenario is down here. If you get an open drive off of yesterday's high of day, and you get a nice finish, you reject yesterday's prices, you can create a scenario for that. Then I'm looking for a pullback to go long, expecting higher prices, and that's where I start pulling in my information to say if this holds, if we open up above today's range and we move back down to today's range, yesterday's range, and get rejection off it, then I'm looking for 24, and I'm going to look for a test of this 30-31 level. If we get through 30-31 with some strength and this becomes an intraday low volume area, then I'm holding for 33. So I have a scenario now where I could take a long off of yesterday's high if the print gives me confirmation, and that starts to become another level for trade if price opens up above yesterday's range. And if you want to, you can create a scenario that says if price opens below yesterday's range, and you would be using 0325, 0350 as a pretty key level based on what happened here. That would be one of your first areas of trade decision. 1903.50, 1903 quarter. The other scenario is, what if price opens up right where it closed? What if it opens up at 14.75? Well, Draghi has already started speaking. The news is out. If my assumption is that this market is waiting for news, and that news is U.S. jobless claims and Draghi, well, at the open, much of that is either in process or has already been done. So if this opens up back at yesterday's close, then I'm looking for a potential short up at this area, 17 quarter. Does that make sense? Okay, good. So all I'm doing is I'm setting trade scenarios, and I'm preparing myself so that if this market opens higher, I'm ready. And I'm comparing it to the overnight activity. If this market opens up right where it closed, I'm ready. If this market opens up lower, right, if it opens up above, I think one of the things I had is 11, yeah, opens below this 1075, 1025 level. I'm looking to take a short around between 1075 and 11 quarter, 1150. Because those are my key levels. So basically what I'm doing is I'm taking the context, high volume area, low volume area from the previous day, seeing if it lines up with other days, and then taking the short term or this longer term volume profile and say, look, right now, the market's giving me this swing here. One day it tried to pop over 37.75. And I don't know if I'm going to be able to draw this. Apparently my drawing tool isn't working. Nope, not working. You see this swing here? there's a pretty clear distribution where the this 1938, 1945 right here is a little bit of a demilitarized zone, so to speak. But as long as price stays under 37.75, then price is in this distribution. In order for price to break higher, it needs to get through 37.75 and it's got to get through 44.75. But here in my trading, if price closes one day above 44.75, where do you think my next target is? High volume area, 53. If it starts rotating around 53, where's it likely to go test? Right here, 56 level. And where's VPOC for the last 90 days? 67.50. So as long as price is staying below this 37.75, it's in this distribution. Low, high, low, high, low, high. Remember what I talked about today? If price can't get through 24.50 and starts moving back lower, I said 17, this low volume area at 17.25 is at risk, right? Because buyers are proving today that this isn't fair price. And because buyers are only going to get into a position to make money, where might they begin to initiate trade again? Possibly here, but if they're not going to do it here, it puts this at greater risk, meaning that they're probably going to look lower. Where was the first opportunity? That 11 quarter 1075 level. Right here. 1025 rather. 11 a quarter to 10 quarter. And that popped up nicely. Where did it go test? Yesterday's VPOC. If price today was going to start moving higher, we would have had to have seen the market starting to accept price here. We would have need to have seen buyers be willing to take price through fair price. If they can't take price through what was perceived to be fair price before, then it's very unlikely that they're going to take it higher. So in a long here, and I talked about it before, this was the target with a potential short back up around the 17 area, which is the low volume area for the day. So can you see how I'm using the overall swings? I have a really clear level between, I'll just do it this way. I have a really clear level make this a different color. Between those low volume areas right there. If price starts getting above 37.75, likely going to go test 44.75, especially if 37.75 proves to be an unfair low. We get a bounce off of this 37.75, 38 area. This is likely going to be tested. Once price gets back into this area, if it does, the most likely place for it eventually to go, doesn't mean it will, is back up to VPOC. But as long as it's staying underneath this level, then my swings are here. Just hit F2 here. Here are my swings for the current market. Let go. And now this. And our potential is back down to this 3.25. And if 3.25 breaks, whoo, possibly down to 225, but man, the next largest low volume area is back down at 1894.50. So this 06 level is going to start to become pretty important. So all of this adds to the context. And like we said earlier in the day, this goes to your if-then, and this is your developing if-then. If buyers are not willing to take price through this high volume area, and price comes back down to this level, then this becomes at risk. And if this loses, then we're likely to see price possibly even come lower. And we will have started, not saying that the market, doom and gloom and everything's going to end, but we will have started a channel like that. And this starts to become our context. So we'd look for a swing low, right? We want to see what happens back down at this 0350, 0325, where that buyer really stepped in hard. And that was pre-market, so that might actually occur at 0605 today. We'll see. But we want to see if they hold. If they don't, you can fully expect a move lower, possibly down to 84.50. That 87 quarter is a good level too, which would be right down to this level. Is it reasonable to assume we're headed now to 1725? I would tell you that it's more reasonable to expect a test of this 05, 06, 05 level. And if that breaks, then more than likely a test of that 0325. And we'll see if those buyers step in again. How has defining your prices of interest prior to the open helped you stay out of spontaneous trades? Not just the levels, but the if-then scenarios. And I will tell you, it's taken some discipline still. But the more that I follow this, more that I put my levels on this chart and let the print help drive me, the easier it is for me to stay out of trades and spontaneous trades. Are swings more relevant than days, meaning a swing analysis more relevant than a day's analysis? Great question, John. Great question. Not necessarily more relevant. They need to work together. If you see something in the day, for example, let's say we do swing low down to this level and we swing high. These are just trends. You don't necessarily trade off of these trends. Let's say it does move down here and price starts moving back up and it moves up and intersects this low volume area and this trend line and price breaks above it in the day. Then the swings become very important relative to context, but that day and how it might end, let's say it closes above, becomes very important for your trade the next day and your trade setup in the next day. We are at long-term unfair lows. We are at long-term unfair lows, 1906, which is very close to yesterday's close, which is where I would expect to see some level of bounce. And we can watch this. If this bounces just a little bit and price hammers right back down into it, maybe back up to 675.7, which was the previous low volume area, and we start getting strength back down at the bid, this could really go. But this was, I talked about this earlier, this was the level between 5 and 6 today, the low volume area, the composite low volume area. So this would be where we would look for a long. And we'd go to our handy dandy volume profile chart. We'd say we got to be careful of this level, 07.25. If it gets up through there, we very well may see 1909. So we'd look to scale maybe here out in front of it at 850. Letting the print then define where you're going to scale. Okay, strength, weakness. Potentially, here's your first scale. Right here. You want to protect some profit. See the strength coming back in at the bid. There's still strength at the offer at 750. If it breaks above this, may see that 09 level again. But this is the long-term low volume area right here. I believe I called that out early. The 05 to 06. It was 675 yesterday, but with the morning activity, because the volume was so thin long-term, it dropped it down to 06 is the low volume area. What's really cool for me is that being able to look out ahead, even as this moves down, knowing that a rejection off of 24 and then below 17 was likely to lead this lower, and we talked about that, was likely to lead this lower, and that this 06 level had the potential to be a good long. If buyers were going to step in, this is where they would step in. And if this gets broken, then our next area would be where those buyers stepped in the other day at 3.25. So we need to all information adds to context. Yes, this is trading is not easy. It's not. Again, the only difference between those that succeed and those that don't succeed is that those who succeed are willing to do the things that those who don't are not willing to do. And that is to do the homework, gain the context. If your job is to trade, buy with buyers and sell with sellers, then you better have a pretty good idea of what they're most likely to do. They can do anything at any given time, but what are they most likely to do? When you have that and you have context, you have control over the one thing you only have control of, and that's your risk. So we've gone a long time today. Tomorrow we have no presentation. Tomorrow we're just going to be in the charts all day. So in my trade plan, I'm building these scenarios based on the information that I've collected. Here's my commentary. I've picked out a couple levels in the commentary. They line up with this. Those are levels that I'm looking to trade with now. Trading, trade psychology. I'm going to go through this real quick. This is a huge, wide open topic. Everyone has an opinion on this. Lots of books, courses, seminar, etc. It's a very complicated issue. It's personal. It's very complicated. Well, actually, I would tell you no. In fact, it's not. Relatively, trade psychology is a very simple concept. How can I say this? Let me ask one question to you. If every time you placed a trade, you knew that that trade was going to win, would you have any psychological issues at all? If you knew absolutely that every single one of your trades was going to win, right? Of course not, right? You wouldn't. If every time you placed a trade and you knew that your trade was going to lose, would you have any psychological issues? No, because you knew you were going to lose. You wouldn't even trade. Why would you ever even trade if you knew you were going to lose? You wouldn't trade. Therefore, you wouldn't have any psychological issues. So there you have it. Every neurosis, fear, anxious moment, psychological issue comes from one thing: your perpetual inability to know the outcome of a trade. It's the uncertainty. It's normal. It's human. And it's hurting your trading. You must accept the fact that you will never know and let it go. The very best that you can do is do your homework, get context, create a plan, watch the auction as it develops, execute and be an effective risk manager with the only information that you know, which is the print. It's the only thing that you know. You have so many internal and external influences on you. Prior to a trade are all these external influences. What if, what if, what if? Your trade setup, you start shifting from external to internal influences. Trade on, you're dead into internal influences. Is this going to work? Is this going to work? Come on, come on, come on, come on. Please God, please God, please God. And post trade, maybe you're toweling off. You sweated so much through the trade. You go back to external influences. Oh, let me go check this. Let me go check that. The external influences, which are the market, should help drive you all the way through your trade. It's the only thing that you know. The market created this thing called the FUD, fear, uncertainty, and doubt. Uncertainty being the most significant of all of these. Uncertainty creates and drives fear and doubt. So let's take a look at this a little bit different way relative to fear, uncertainty, and doubt. At the beginning of a trade, you don't have any fear, you just have doubt. I doubt, I doubt, I doubt. When you start looking at getting into a trade, not only do you have doubt, but you have fear. Fear if the trade loses. Once you get into the trade, a lot of fear. And then once you get out, doubt. The one thing that stays the same through every aspect of trading is uncertainty. The market is and always will be an ambiguous, uncertain environment. Those that have a difficulty in ambiguous environments will have difficulty being successful at trading. Ambiguity and uncertainty creates emotion, fear, and doubt, and emotion does two things. It limits your ability to interpret data and act objectively, and it gives power to your fears and doubt, which increases subjectivity. Everything that makes you interpret the market subjectively will make you lose money, miss opportunities, be defensive, be less likely to learn, revenge trade, create more or give more strength to your negative beliefs. Everything that helps you read the market and act objectively will allow you to be successful at managing your risk reward, have more patience in waiting for trades and targets, let winners run, act objectively, and stop losers early, and actually grow your trading business. It's the uncertainty in the market that messes with you as you trade. It's the one thing that will keep you from looking at this thing, at this, and this, and interpreting and reacting the data that the market is showing you. You have to accept the fact that you're never going to know what's going to happen next. And the only thing that you can control is your risk and put yourself in a position where you can control that risk better. That means finding good trade entries, which means understanding context and understanding where buyers likely to come in, where are they likely to defend, and where are they most likely to take price. Perfect example. Once they got through that, most likely place for them to take price was '06. This is the first place we'd expect to see buyers, '06. If we start getting strength again down at the bid at '05, '75, '06, '05.50, you can start looking down here and possibly lower. So day 4 homework is relatively easy. It's not a long list. It's taking this sheet and completing it for tomorrow. Pop in the numbers, these numbers, write your commentary and some scenarios, and in the morning we're going to talk through the scenarios. And DB, well, I was going to say maybe we could start a little earlier, but that's the homework for the night. The Excel template will be available for download, absolutely. Yeah, they can use that one I gave you yesterday. Yep. I changed a few columns, but it's not going to impact anything. So that's the homework. I want you to come tomorrow with a sense of context of the market. What did the market do? What is the market trying to do overall? How successful is it in doing it? One of the things I would tell you, here's one of the things I'll be looking at right here. This '06 level is not an insignificant level. Right down here, '06, '07 level. If we close below this tonight, um, then that certainly gives me an understanding of the overall effectiveness of our buyers and sellers right now. If this winds up being our low, this 525, 550, and we close back up towards 1475, then this gives me context relative to the buyer sentiment down here. And I truly will start to expect to see, we'll have a little bit of a higher low. I'll start to expect to see this be our swing low for the day, and if this is, or for this swing, and if this is our swing low, then I'm going to expect to see the swing high at least here tomorrow, if not higher. I'm not going to create a bias. I'm still going to use these levels as key levels. But if the market can't penetrate lower and close, make some additional room to the downside, then this gives me a second instance where buyers have said not going any lower. We see value higher. We're committing to this level. So we've been 3.5 hours today. I wanted to make sure I went through the information you needed to collect to do the homework, how to gain the context, and then once you have that context, how to start identifying levels as your if-then statements. So as I look at the volume profile today, let's just say, now it's going lower. Thought it might, but I don't know what the profile is going to wind up looking like today. Watch this level down here at 3/4, 350 though. Let's just say it bounces down there. We get responsive buying off of that level. And this is what our profile looks for the day. Then I will Sorry, I'm thinking about something. Then I'm going to look at these levels and say, here's where in this distribution right here, this is the highest volume area. This is still a valid short for me. If we open up below 17, I'm going to look for a short in this area. If it pops above it and comes back down and tests it, I'm going to look for a long. Simple as that. This is a key level. If we open up below, say, this 03 level, if we open up below tomorrow down here, I'm going to look for this 06, 07 level, and I'm going to look for a short back down towards 94.25 to 95.96 level, 1896. So I'm going to take this, I'm going to say, if we open up in this range, this is what I'm going to do. If we open up in this range, this is what I'm going to do. If we open up lower, this is what I'm going to do based on this information. And then tomorrow morning, we're going to come and update that based on the overnight session. And I was just thinking, DB, could we set up a time for Sunday evening to do a pre-market, not pre-market, but a trade planning session for Monday? Okay, so let's you and I kind of agree on a time, and what we'll do is have the room open for Sunday night, and we'll go through the context of the week. We'll look at the big picture, what the market's trying to do, how good of a job it's doing, how well it finished on Friday. Did we see any responsive buying on Friday? Continued acceptance lower. What did we see on Friday that would start to lend to a trade plan for Monday morning? Okay. I hope people can make that. So DB will, I think, just pick a time. How about say, I don't want to get into anybody's dinner time. I don't know. Sunday night. I'd like to do it after the market reopens.
Okay, I'm just going to suggest that we talk about this after the session, and then we'll be sending out an email that tells you when videos are uploaded and all that kind of stuff. So I'll make sure and put it in there.
Okay. And by the way, we got a little bit of a low volume area right here coming up at 475. I'd watch 475.5 level. If it gets through that, it may start creeping back up now towards 1909, but watch that level. All right, then. We've been going a long time. This is the homework for today. The first thing we do tomorrow is we actually go through the homework and the trade plan. So I want to have the trade plan done and set so that we can actually do the open tomorrow and start trading and taking trades tomorrow morning at the open. Okay? Thanks again for hanging with me today.
Another excellent class. I think everybody really enjoyed it. We had a couple of people ask where things are, so I'm going to share my screen real quick, give you some navigation before we close out for the day.
Okay, and I got to run, so I'll take off, and I will talk with you a little bit later.
Sounds good. Thanks again, Mark.
Okay, thank you.
Okay, this is the client portal. And just so you guys know where everything is located, if you go up to the top, courses, you'll see the volume profile analysis listed there. Course homepage and room, same place where you log in the morning. All of the homework and Mark's templates and the test and things like that are located right here, as well as up above that, the recordings. So we've had a lot of difficulty getting this stuff up in a timely manner, and I apologize for that, but the first day, the quality of the video was just terrible, and so we had to kind of re-render everything and go through it. So anyway, I'll make sure that, actually, Mark said to just go ahead and use the one that's already here. So this is the template he was talking about. So you can just click right on that and open it up, assuming that you have Excel. Okay, I want to say thank you to everybody. Just a quick note, our web admin accidentally sent out an email just a few minutes ago that supposedly had a survey, but the link is broken. The survey hasn't even been built yet. I want Mark to be able to ask you guys what questions he wants to ask you. So I apologize for the random odd email going out. You'll probably realize that there's something in there, but we'll make sure that Mark's survey goes out when we send the email later about 1, Sunday night, and 2, when today's videos are available to you. I hope everybody had a great day, and I hope everybody's enjoying this as much as I am. We'll look forward to seeing you tomorrow. Thanks.